So, hello traders, welcome back to my channel. It's either funds again. So today we're going to be talking about market structure. Right, I promised in my previous video that we'll talk about it in my next video. So yeah, if you haven't subscribed to this channel, please do that. Like, share if you find this video helpful. So I'll keep a lot more coming. Right. So let's get into it. So normally we have three trends in market when it comes to direction, right? The first, we have our bullish move, which is comprised of higher highs, higher lows, higher highs, higher lows. Sorry about that. So we have higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, and higher lows. Excuse me. So this is where we call our higher highs, and this is where we call our higher lows. Higher highs, that's the top. Higher lows, that's the bottom. The bottom. We have the higher highs again, and we have the higher lows. Higher highs, and we have our higher lows. Now, why is it called higher highs and higher lows? As you can see, this high right here must be higher than the previous high to be tagged as higher high. And this took out this high, this previous high, this high right here. That's why it's called higher highs, because it's higher than this high, this last high. So it's called higher highs. And this low is higher than this low, so it's called higher low, because it's higher than this low. And this low is higher than this low, that's why it's called higher lows. And this actually, that's why it's called higher lows. And this actually, that's why it's called higher higher lows. So now let's go to this is the bullish, this is the bullish, this is the bullish in structure. Right, this is the bullish structure. When we are buying, this is for the buys. For uptrend, right? When we are buying, that's when we are seeing higher highs and higher lows, higher highs and higher lows, right? When we are buying, we don't want to see any of this structure violated, right? And for us to be buying, we want to see the previous high takings to know that yes, we are in the uptrend and making higher highs, higher lows. If you're not making higher highs and higher lows, you don't want to buy any market, right? You must see higher highs and higher lows for you to decide, okay, you're buying this trade and actually not selling. Because if you're selling, then you're opposing the market and you're doing what the market makers want you to do, for them to liquidate you in your moves. So excuse me, they are actually for the buys. You can screenshot this, because I'm going to clear everything and let's continue. So now for the bearish, right? Of course, a bearish want to be seeing lower lows and lower highs, lower lows and lower highs, lower lows and lower highs, lower lows, right? This is my lower low, this is my lower high, this is my lower low, this is my lower high, this is my lower low, and this is my lower high, this is my lower low, and this is my lower high. Now again, why this is called lower lows is this low right here, this low right here is lower than this last low. That's why it's called lower low. And this high right here is lower than this high. That's why it's called lower high. Same here, lower low because it's lower than this low. Lower highs because it's lower than this low. Lower lows because it's lower than this low, and lower highs because it's lower than this high. So actually, that's all there is to this. And you always say this in the bearish market, right? Sorry, you always see this in the bearish market. This is very structure. can also screenshot this if you want. Right, the bears are sells. When they say bearish, right, when the market is bearish, it's for sellers, it sells, right? And when it's bullish, it's for the buyers, it buys, right? So actually, when you're actually seeing this loose taking out, the structure is taking out the previous lows and the high not able to break the previous high, then we are said to be bearish, because we are only taking the lows, we are not taking the high, and we don't want to see the highs taking, because that's when you want to be catching yourself and selling the market. You don't want to be buying this market actually. Why? Because there's no zone actually that is telling you that okay, we are buying. Why? Because there's no zone that is strong enough to take out the previous high, right? You always see only the highs being strong enough to take out the previous low in bearish market. It's always breaking the lows and failing to break the high, breaking the lows and failing to break the high. I hope you understand what I mean, right? You want to just see price continuing, and price can never continue to just go bearish. Why? Because there's always, as there's buyers, there's also sellers, and as there's always sellers, there's always buyers, right? And without buyers, there won't be sellers. Without sellers, there won't be buyers, right? We have to have some people buying, so they liquidate their positions, and we sell with them, so we have their money. It's so sad actually, but that's just the sad truth, right? You have to be, there have to be sellers at where you are buying, right? At the zone you are buying, let's say the market is selling, right? Let's say the market is selling, and there are people busy, buying from here, getting ready to buy from here. And the market makers know where their stop losses are, and they know where their positions are, right? People are actually trying to buy right here. They are waiting for the price, so they actually do what? They actually buy to the upside. But you being smart and knowing your market structure, you are following the market makers. You're actually selling here and actually taking out these buyers right here, and taking out their stop losses, right? And you being smart, after this, maybe you can close your trade or take partials or whatever. Then you wait for the price to come back again to your zone, and you sell again. And actually, there are buyers right here busy buying, because there are always buyers right there. People who are hoping that okay, the price will buy. They're just buying blindly and selling blindly, or using false, information to trade, right? And you don't want to be that actually. You want to be the smart one, moving with the market makers, right? Mind you, you lose actually, but your profits. If you're trading smart and you're trading with the right information, you always make profit than your losses, right? That's all we are here for, profit and no losses. Now let's go to the third market structure. This market structure always occurs after a big move. Now what do I mean by after a big move? Now, when the market is selling, alright, when the market is selling, it has been selling for a long time, what do you expect? Now you're expecting after maybe price has come to your POI, your high time frame POI, you're expecting the price to turn. Now you're expecting buys. Now the price won't just come here and actually just start buying. Now if it does this in the high time frame, in the lower time frame, it's not actually this move as you are seeing. It's not as clean as this. And even in the higher time frame, I can assure you, it won't be actually this smooth or this fast, right? If price comes to your POI, especially higher time frame, it will always consolidate. Now consolidation, that's the third market structure, right? It always happens after a big move, right? After a long trend, a long existing trend, maybe bearish, a long existing bearish trend or bullish trend, right? You want to see reversals. It always occurs, not always actually, but it always occurs most times when the market wants to change trend, right? So now we are in the sellers, and actually, like I said, when it's selling, You don't want to be seeing your highs taking. You always want to be seeing your lows taking to tell you that okay, we are actually selling. Now price has come to your POI. That's when you start seeing price consolidates. What's consolidation? Now this is when price, we said if price are taking out your lows, that's when we are bearish, right? Doing this. And when price is taking out your high, going up, this is when we are bullish. Now this consolidation is quite confusing if you don't know actually your market structure, your intense market structure, your advanced market structure, because price might be doing this, not taking highs, not taking lows, and maybe making a fake out. Now I'm going to talk about that in the next phase of this video. Now people will be like, okay, now we've gotten our high taking, so we are buying. Then you see this again. Now confused traders will be like, okay, now we've been stopped out here. Maybe you saw these buys and you say, okay, that's people that trade support and resistance. I'm not talking about entry here, but I just want to make a point. The people are buying here and now they take out your stop loss, and people are busy, okay, to sell, waiting for sales, and now they are being taken out. Why? Because the market is not actually trending, right? Consolidation is not actually a trend. It's more of accumulation phase, right? It's more of where the market gather their liquidity, pick out liquidity, take out liquidity, then inject liquidity, right? I know this is too advanced, but I'll make sure I take everything in steps. And yeah, I do this on my mentorship. If you want my mentorship, just DM me. I'm going to put my contact and my info in my comment section. Yeah, where I take I only do one-on-ones, right? So I'll give you the information you need. So let's continue. So if price is actually consolidating, you want to wait. Now if this price high is taking, don't say you'll be buying. Or if the lows is taking, don't say you'll be selling. Wait, because the market has been in a long trend, right? It has been in an existing trend for a long time, right? So you want to wait, let the price breathe. Now if this high is taking, you want to see another confirmation. I'm not talking about entry, but I just want to tell you how to spot fake outs, right? So you want to be waiting for price to take out two highs, maybe, if you want to start taking your buys or sells, right? So that's just it. There's three trends. Like I said, we have consolidation, we have buys, we have sales, right? So now let's get back to business. Now this is the consolidation, right? This is the consolidation. Then you can see buys, right? And these ones are taking highs, taking out highs, and not taking out lows. Now let's talk about fake outs. Now fake outs is when, like we say, when we're buying, we don't want to see our lows taking, right? But fake outs, what happens in fake out is, now this is our low, right? That's our low. Sorry, that's our low. But what will happen is to make this kind of structure, taking out this low. Now people will be like, okay, this market has changed trend, right? This market has changed trend to bearish, right? And people will start looking for entries. At the end of the day, they will be stopped out. Why? Because this is not actually a change of trend. This is just fake out because they know you're taking trades at this zone, and putting your stop loss right below your zones. The fun fact is, and as sad as it sounds, they don't want you to make money. That's the truth. They want to take your money, these brokers, right? Because as you make money, they make losses, right? So they want to come and take out your trade, maybe give you a little bit reaction right here, take out your positions, react to the maybe lower zones, and actually continue buying. So what happened here is just fake outs. Giving you a false change of character or change of market trend. So you'll be actually buying, After they take out your stop losses that are sitting right here, your SL that are sitting right here, now you decide, okay, you want to sell. Then you mark out your zone, you want to sell. Then price comes to your zone and actually continue buying, not selling. And again, your stop losses will be here. And they took your SL twice. And that's what we call liquidity grab. Actually, I go more intense on this topic actually, because this is a very, very, very important topic. This is what will minimize your losses. I go about this topic specifically on my mentorship. Seriously, guys, you don't want to miss this. I'm not just talking about it because it's my mentorship, but there's a lot you guys need to know about this liquidity, and people are even getting this liquidity grab wrong. We actually know that yes, what I just showed you right here is the liquidity grab, but there's more information that you are missing and your mentors don't want to share with you, especially in these YouTube videos, right? So like I said, my contact will be in the comment section. So actually, these are the trends we have in the market structure. We have the sells, right? We have the sells, we have the buys, we have the consolidation. This is the bearish, and this is the bullish, right? So there's always just three trends, right? Because this liquidity grab is not a trend, it's just what they use to stop you out. It's just stop hunt, right? So we only have these three market structure. We have the bearish, we have the consolidation, and we have the bullish, right? That's how you always see this market: buying, selling, or consolidating, right? So hope you are informed. Now let's go to the chart so I'll show you what I actually mean now. So as you can see right here, we are buying. So let me make this hair, crosshair a little bit thicker. It's a bit dark. I don't think I can change it. So hope you are seeing this. So you can see we are buying, we sell, making higher highs and higher lows. So let me use line. As you can see, let's make this a little bit thicker and darker. Yeah. So you see, this is the higher highs, this is the higher low, this is the higher highs, this is the higher lows, this is the higher highs, and excuse me. Like I said, when we are buying, we don't want to see the lows being taken, right? We just want to see the highs being taken. As you can see, this high right here is higher than the previous high. Now we confirm we're in an uptrend. This low, we don't want to see this low taken by the previous low, right? Now we confirm we're in an uptrend. We have higher highs, higher lows, higher highs, higher lows. I want you to focus on the center of this crosshair, because that's what I'm using to indicate. I hope you can see it. Higher highs, higher lows, higher highs, higher lows, right? As you can see, higher highs, higher lows. Now, for us to see that, confirm that we have changed trend. Firstly, maybe you have your zone marked out, like I actually have right here, so you don't have you don't fall into thinking maybe price is just making fake out and the market leaves you without giving you an entry. So you have to have your zones marked out, which is a topic for another video of entries and stuff. So I won't be having that here. So when you're having an option, you just want to have higher highs, higher lows, higher highs, and actually higher lows. Now higher highs, right? Because it's higher than these previous highs. Now what are we expecting? We're expecting another higher low after a higher high, right? After a higher high, we are expecting higher lows. But now what happened? Price came down and made a lower low. But that doesn't mean, maybe if this happens in your zone, yeah, it's giving you a confirmation that okay, we are selling, you look for a source and you get into the trade. But if it just happened out of the blue, don't fall for this, because this will definitely be a liquidity grab. 80% this will be a liquidity grab. But if it happens in your zone, especially in a high time frame like this is a H4 chart, then actually this is a valid entry for sales. So seeing this, I know, especially when it's at my zone, I know we are actually selling, right? Because we took out the previous lower low. Now what are we expecting? We're expecting a higher low, right? Lower highs, sorry. So now we have a high low, right? Now we've changed trend to what? I think you guessed it right. We've changed trend to bearish. Now we are not in the bullish market anymore, because we are not seeing these highs being taken. These highs specifically. Now we are seeing the lows taken. Now when the lows are being taken, we are actually bearish. Anyway, you see the lows being taken, is bearish market, and when you see the highs being taken, is bullish market. Just have that simple analogy in your head. When it's taking out the highs, it's bullish. When it's taking out the lows, it's bearish, right? So now, actually, this is what I was talking about. Before we go any further, this is the consolidation I'm telling you about. You see right here, price because this whole zone is consolidation, right? Because this was hardly big of structure right here. Why? Because this is a weak big of structure, right? It hardly closed with the body. That's why I marked it as high highs. But generally, specifically, I'll mark this as my consolidation, especially since the market is at my zone. I'll mark this as consolidation, right? So now we are, like I said, after existing long trend, as you can see, after this bullish trend, right? So now we're in a bearish trend. So talking about the fake out, you can see this is the previous high, lower high, right? So we're not expecting price to take out this high. We're expecting price to just create, more lower highs and lower lows, right? Now, after market creating this lower highs, created these lower lows, almost like equal lows, but it's actually a lower low, right? So we're expecting price to create another lower highs. But what then happened? Price broke structure to the upside. Now, if you're a confused trader, you're thinking, okay, now we broke price to the upside, and now we're expecting buys, which is not what is actually happening, right? Now, this now is not a liquidity grab. As you can see, these highs now formed liquidity, right? This is not a liquidity grab. That's what I was talking about previously. Now, this is a liquidity grab. This is meant to stop traders out and move in the right direction, as you can see. Exactly what I showed you, right? It will stop you out. People will be selling right here. It took out their stop loss, right? Now coming down here, people will actually be buying because it thought it is actually buying, and now it took out their stop loss as well. And that's stop point. You have to be very, very careful of this stop point, right? So actually that is just the market structure. We have the buys, as you can see, taking out highs, higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. Now in bearish, lower lows and lower highs, lower lows and lower highs. We don't want to see the highs taking, right? Especially if you are following the high time frame, right? You know that after this long trend, you're actually selling. I don't know what your analysis will be, but if you're using high time frame after a long time of buys, there will be retracements, right? So now you have to be careful for this liquidity grab, like I said, right? Don't fall for the first break of structure, because this is not a change of character, right? I'm going to talk about this in another video, but I just need you to know about this liquidity graph, right? Be very careful. Don't think this is a big or structural change of character and start buying, looking for buys. You will just be stopped out, like you see right here, right? Follow your trend. Don't ever buy in a selling market, and don't ever sell in a buying market. That's just the key. That will save you from blowing accounts. Just look, stop watching every video you see, because there are some people that they are just trying to sell their courses, sell their mentorship, make money, and not actually give you the right information. Because even they don't have the information to give you, the right information to give you, right? They're just picking every information every trader is giving, then they'll try to sell you that course, because that's not even a knowledge. How they give you knowledge to play accounts, right? That is not a knowledge. That is just actually scamming people, right? So yeah, just never buy in a selling market and never sell in the buying market. That will save you a tons of money. And that's when you start seeing consistency in your trade. When it's buying, look for buys, and you actually start making money. Trust me. I'm not saying you should come and pay my mentorship or something, but this information I'm giving you, try applying it. If the market is selling and you see buys, don't buy. Just try this. Don't buy. Rather look for sells. And you see that your profitability will increase. When it's buying and you see selling opportunity, don't sell. The market is always there to always give you money. Don't rush. When it's buying, don't sell. Rather look for buys. So I hope this video is helpful, and if you haven't subscribed, please subscribe to this channel, like, comment and share. And for any information, my contacts will be down in the comment section, and my free group actually will be down in the comment section. As you can see, we are actually killing the market in the free group, not even the VIP. This is the free group. We are actually killing the market, right? So the link will be in my comment section. Hope you like this video, and I'll see you on the next one.